Subscribe and click on the bell icon to be the first to see the latest videos.
Good afternoon. I think I'm standing between you and the lunchtime. So please pardon me in case if we spend a little more. Have your patience and we will take you through something probably a little different than what majority of my earlier speakers have spoken. I represent Wockhardt. It's a pharma company. So it's a global environment, and looking into the challenge from the global environment, we will look how our strategic CFO is coming into the play right now and becoming the change factor of the change, right? I will not bore you by telling anything called technology. I have been speaking on that subject quite some time, but today I will be refraining myself because I think my previous sessions have already taken care of that. Let us get into this. First and foremost, this presentation today, I would sincerely like to dedicate to, this is not working? Sincerely like to dedicate some of the greatest minds that I have worked in the industry for last several decades. Believe me, they made whatever little bit I could contribute to the industry and otherwise to myself. Some of the geniuses with whom I have worked, those did only one thing with me, is that challenging myself. I will sincerely request all the finance professionals here to challenge yourself. Today, tomorrow, things are changing. And lastly, this presentation today is all dedicated to you. I understand that you come from a very variety of experiences, variety of industry, different age bracket, different relevant experience bracket. Believe me, you are right now in a cusp of something which is unprecedentedly changing. So probably tomorrow you will be the change factor of an uncertain world. And that's the reason I think I looked into my previous sessions. People are talking about, all the CFOs are talking about something very, very different. I will try to give you 4 small places, and please read it a little fast and just tell me who may be the person who has spoken about it or may have been, what is the context. I will not take much time because there's a pressure. Can you just go through this and think? Okay, I take you to the another one. Till this, any clue who may be the person and what context or what is the level where he or she might have spoken, or what is this? Any clue, anybody, any guess? No, nothing? Okay, let me give some clue. Is it an entrepreneur? Is it a regulator? Is it a politician? Is it an economist? Is it a professor? Any clue? Anybody can?
Entrepreneur.
Sorry? Entrepreneur. Okay, any other guess? Politicians. Okay. I give this now. Are you changing your mind, those who have said politicians or industry leaders? Are you changing mind or you are still there?
Regulator.
Sorry? Regulator. Okay. Anybody changing mind? You have still an option. Okay. The next one. Believe me, it is told by the same person. Any change of mind? No. So your guess was an entrepreneur and business leader, or you said politician and somebody said regulator. Believe me, none of them. This is what is today. This is North Atlantic Trade Organization and World Economic Forum in Davos. Things are changing. Politicians are not speaking about it. The industry leaders are not speaking about it. World is speaking about it today. Things are desperately changing. And believe me, probably that's the reason all the CFOs here or in anywhere in the world is talking about these words which I need not to speak much, and you agree. Most of you will be agreeing, I also agree. And lastly, I'm a little sorry, I cannot see the screen here, so I have to little move my back towards you, which is not very pardonable or unpardonable. But you are also managing the governance, risk, and regulatory framework. Do you agree? Taking a lot of time. And that is probably happening. My previous session, Mr. Kannan also told that things are changing very rapidly. I take you this is a slide, if you can see. 1995, the first time the WWW came, which is on the left-hand side here. Okay, it's not working. 2010, none of the disruptions are good. 2010, the print media, TV, it became digital. 2015, I think most of us started working from our mobile phone, our iPads, particularly in the segment of insurance, banking, and so on and so forth. 2020, which is just 1 year from now, all safe havens are gone. Industry is blurred. I really don't know which industry I represent to. Today I represent a pharma or healthcare. Do I really represent a healthcare or a pharma company? Or I represent something else? I am not very clear. On the right hand side, this is also, I really urge you to read it carefully. There are 4 waves in last about 30 years, from 2000 to 2020, last 20 years. The first wave we just talked about, look at here, only 1 billion instruments were connected. First wave. The second wave is mobile internet, where we were becoming more anywhere real time. About 10 billion instruments got connected digitally. Third wave, Internet of Things, where we are today, where the physical and the digital convergence is happening. I think Alexa, we are using it day in and day out. Okay, where almost everything is coming into a phase where the digital is taking over. And third, the fourth wave, we will talk about a little later, where the AI robotics is taking over. In all probability, by 2020, about 50 billion instruments will get connected in the world, changing our life. And life means, I'm talking life, forget about only finance. And there, apart from automation, man and machine convergence, like probably if you have seen the older movies of Terminator, will come into the play in real life. And taking from there, there is another one chart. Contrary to your belief, the majority of the AI ecosystem, which we believe that the financial institutions, banks, they use it. But contrary to the perception, AI is more being used by the regulators and the governments today. They know it. Now, what they know, I don't know, but they know it. So, whereas our normal perception is that the innovating new companies, startups, research institutes, they are more using AI and robotics. Believe me, it's not. It's being used by somebody who is just keeping a watch on us. It can be a very large retail chain globally. It can be aviation. It can be weather. It can be even a company like us, a pharma, and also, of course, government. Things are rapidly changing. On the other side, by 2016, the total investment on the digital platform in this globe was about $1.5 trillion. This is World Economic Forum data, right? Is about $1.5 trillion. It is expected by 2020, it will go to $2.4 trillion, which is close to Indian economy. And that is a growth of 13% CAGR. Majority of the industry is not growing by 13%. But the investment in this is increasing by 13% CAGR. What are we? And why that is happening? Probably in all probability, the cost of automation is rapidly decreasing. I give you a smallest example. Drone. 2007 in US, at that formation of drone, were about $100,000. Today, it is not allowed in India per se, but it is available anywhere in the globe by less than $700. I talk about a 3D printing. 2007, it was more than $40,000. Today, it is less than $100. I belong to pharma and research. For doing a DNA mapping about almost 20 years back, it was $1 billion. Today, I can do my genetic mapping by less than $1,000 in the US. This is unbelievable. But what is happening? I will come to that, how CFOs are getting impacted on this. On the right side, in the previous slide, we talked about that the industry movement 4.0. I understand that all of you know about it, the 4.0. 4.0 is changing the way the industry works from a production-driven, manufacturing-driven to a value-driven business is happening. Believe me, prototyping is changing very fast. Real-time supply chain is changing very fast. Even it is happening in India. I talk about an output demand forecasting. I think somebody spoke previously on this. The demand forecasting is happening today. It can be completely sync with your entire supply chain. And this is called is Industry 4.0. But the next one is very interesting. The interesting is this. Look at the technology reshaping the trade flow. It is expected by 2030, about $4.7 trillion of goods transaction, it is both buying and selling transaction, will be enhancing only because your cost of operation is changing. And when I say cost of operation is not cost of manufacturing, I'm talking end-to-end, including your supply chain, including your transaction cost, including your financing issues, including your relation between the supplier and the vendor and the customer is undergoing a change. Probably some of you may be doing a blockchain and so on and so forth. On the other side, which is also very important, the 3D printing, automation, AI may move the physical distance between a manufacturing and a consumer. It might be, you might need a suit to be today tailored. You need not to go to a Raymond showroom. You can just do it even online sitting at your room. They will be able to deliver. So probably it is expected that $4 trillion worth of movement may undergo a change negatively because the production versus consumption will be a shifting. I'm giving you this backdrop only because that what I spoke a couple of minutes back, the digital is blurring the industry spectrum. Where we are not very sure. And with that, I come to my next one, is that probably all these changes are happening, all of us, and CFOs are no exception. So how to change the change? I have little reshaped the agenda here, changing the change, right? And all the finance people here today, I think we will be doing it in the future. So I could not resist myself to quote this gentleman. You can follow him on the Twitter, you can follow him on the blog, on the blogs, right? He said very nice, by far the greatest danger of artificial intelligence is that people conclude too fast that they understand it, including myself. So, and with that, I actually, made sure that I rely on my natural stupidity rather than giving you a broad lecture of AI, robotics, and so on and so forth. Believe me, I don't understand them. I go by very basics. And my basic says that CFOs were expected for the last at least 30 years in the industry who are expected to do these things. Do you agree? If you don't agree, please raise your hand. Otherwise, I will say the silence is the concurrence. A lot of regulators also believe that way. You agree? I hope you agree. I hope you agree. I hope you agree. And I hope you agree the advisory that we do. But what is the strategic CFO then in this? This was a mundane process keeper. Then where is the strategic CFO coming into the play today? Where this is a subject topic today. Is there a conflict between an expected CFO with a strategic CFO? You have to think. Is that the business performance risk, which is evolving very fast, is challenging us heavily and making sure that we do a course correction? If you agree to that, I will go to my next slide, which looks to be really, really disruptive. The disruption here says the business performance risk is very high because certainty is no more a luxury. You cannot have it anymore. Point number 2, believe me, today, disruption doesn't care about your size, your proximity. I quote it, proximity. On that proximity, we have run our businesses for quite some time all over the globe. It does not even talk about your position, right? A very highly unionized Kalipili taxi of Mumbai went out of the market not by regulators' action, by somebody who is not even a car rental organization like Uber or Ola. Power of ownership. I think somebody spoke before me. Power of ownership and decision making has moved out. And that's why we are being challenged. Your consumers are extremely empowered now. They demand things on which we are not ready to. This is my most favorite and lovable word. Success is no more a guarantee. Believe me, I have seen it in many organizations that they were there for the last several decades on the top 100 market capitalization company in the US. None of the latest 10 top market capitalization companies today in US were not there in existence 30 years back. So please do not have a feel that the past success will make you grow. So probably there is nothing called a framework. So how come we become relevant? That relevance is very, very important today in this particular scenario. I'm not giving you any psychometric test here, neither giving you a challenge that there is something grossly incorrect. No, I'm just trying to give you a thought process. That's all. You can go back and think through, because you are coming from different industry. I'm not an industry expert of yours, and neither I'm a subject matter expert. I'm just telling you to think, challenge. In that, you have seen that our designing was business planning, so on and so forth. The way the CFOs we were working for last couple of decades were that define a framework, we do a budgeting, we do a performance analysis, we do a KPI, we review risk, and we talk about mitigation of risk. We say that we plan well, we are a budgetary experts, right? And we monitor also even every quarter, every month. I'm not talking about your statutory reporting. Even internally, every month you review. And also we are the guys who help the HR to link the performance with the strategy. Okay? And the last one, I need not to talk. Less we talk, less we be happier. So these things when we were doing, I think 5 things we could not overcome. And that's the challenge, the way today people look at when they talk to CFO. Number 1, I think we still remain in the silos. The visibility across functions were not very much clear. Do you agree? We generally work very much in silo. We will have another slide coming up that why I talked about a silo. The technology improvement is so high in the world that probably we could not cope up with the technology development vis-a-vis the risk, capital, and cost management. Like my previous session, the speaker talked about how you do an activity-based costing and get into a right kind of a framework of decision making. Believe me, it can be done by a technology. But I don't know how many of us are really invested in that. Business performance risk, this is a top threat. But while we were doing all this, you will all agree that this particular point is taking our maximum time. You agree, correct? If anybody disagree, please raise your hand. I felt that we are completely in sync in this. This I really don't know what is the cyber risk is all about. It's a Hebrew to me. And of course, different stakeholders ask us different. The CEO asked something else, board said something else, auditor said something else, regulator talks about something else. In between, the rating agencies, bankers, investors, analysts, they all come sit on our head and ask something else. And that we manage. I'm not saying we need to move out of that, but that's what we are doing. While we were doing, probably that's the reason the CFO's role are being again and again, again and again, again and again, defined and redefined, probably. And most desirable requirement by the industry was that you come out from a critic of choices to a strategic partnering. That's what I think many forums people talked about. That you come out of your analytical and critical choice and appraisal process and start partnering with the business. My previous session, the speaker, Mr. Kanan, talked about, how you get into a customer satisfaction, which was not a desirable role by a CFO or a finance professional. But today it is happening because the management expect a finance professional to be a strategic partner to the business. I have a little bit of allergy to the word called partner. That's what I said, partnering. Partner can be partner in crime, but partnering is different. So be very specific, whatever words I have used sometime, just to make sure that I emphasize it well, I put it in different colors or different italics. Let's get into a little recapitulation because we will get into our next phase of our discussion. What we've seen is world is changing first. What we've seen is the wave 4 has come, digital has blurred us. We have talked about that artificial intelligence is there. We have talked about that the CFOs are expected to do many things, and so on and so forth. But today, to us, the only thing which is needed is the speed. To us, probably, the way I look at the digital is the fastest depreciating asset of the world. If you have something today, it's not there tomorrow. And there is no accounting standard to do a fastest depreciation. I'm not getting into accounting per se. We know that we were expected to do something. We have seen that there are frameworks are changing. We have seen that the business performance risk is evolving again and again, again and again. So naturally, people are expecting us to be a strategic partnering role rather than a critic of choices. Let's get into our second part, that how we bring that change or embrace the change, how we remain being relevant to this. Let's do this a little more. I will now take you in 5 different ways of looking into embrace the change. 1, strategic CFO versus strategic risk. Let us evaluate it a little more. We will talk about it. Point number 2, are we too much in the comfort zone? Are we moving from our comfort zone of several decades of training, work, expectation of the management? I'm sorry, I think I'm coming onto some views. And are we getting into a value territory? We need to debate, and we will debate on this. Point number 3, I don't know, I get allergic once again. I have been told many times, you are the custodian of value. So from custodian mindset, how can we get into a thought leadership? Thought leadership does not necessarily mean you have to go and give lecture like me. It's not. It's an inside, internal, organizational. Number 4, whatever shifting or changing we are doing, are we doing with a sustainability? This is a very typical word being used, but not many people understand what is the sustainability. And lastly, embrace the change and making a paradigm shift. I will take you through in this 5 in next 10 slides. Let's move on. I don't think that I need to talk about it much because you understand it well. There are 5 kinds of risk. I put it as equal risk just to avoid any kind of confrontation here. We talk about operational risk, competition risk, financial risk, reputational risk, governance risk. We all know about it, correct? And that is the risk on which any organization works. And that is also brings in a strategic understanding. Now, if you agree to that, where are we in that strategic designing? On the left-hand side, this is a very, very comfort zone of majority of us. We capture data, we do report, we do analyze. On the right-hand side, we become insightful, we become influencing, we are creating an impact. So from comfort zone to a value zone, probably we are not moving fast. The reason is that we are extremely, extremely trained, I'm saying, trained and educated are different words. Trained because of our accounting experiences, majority of us. Point number 2, our commercial and analytical understanding having numbers in place, probably very, very high. And that's the reason we do this. We feel very comfortable. Believe me, I'm very happy to look at Excel sheets rather than somebody talking to me something else, because I'm comfortable with that. But the moment it comes to the value chain, your influencing and leadership skills comes into the place, which is probably the change from a comfort zone to a value zone. And to look into that, I put 2 slides and ask you 10 questions. You need not to answer. I will give it to you because we are running a little out of time. First 3 questions. Question number 1, how I move from comfort zone to a value zone? First question, are we doing a market-driven or time-based decision-making? Let us question that. Are you still at periodic budgeting, periodic review level? Then you are time-based, you are not market-based. Market is changing fast. Point number 2, are you responsive or reactive? You did not to answer, you can think through, right? That's the question of the first one. So as a finance guy, are we responsive or we are reactive to the situation? Second point, are your internal capital allocation, I'm not talking about capital budgeting, I'm talking about internal capital allocation. Are you right now doing it strategically, or that's because you need money to put it into working capital, you are doing it, you need money for something else because management wants it to do it, you just do that. Are you questioning this? Do you identify wherever your capital allocation is going, losers or gainers early? Okay? I'm from a pharma company, R&D investments are very key bread and butter for us. I'm not very sure that any one of us understand it well, that how to do an R&D capital allocation is very, very difficult. And foresight and crafting the strategy in the uncertain world. Of course, you agree that in a dynamic situation, the strategy is very different. Are you doing an alternate path well in advance? If you are doing and going into a right direction. Can I have a little bit of water? Next, if we are doing in the same sequence, thank you very much. If you are doing and sequencing, the next 4 points is on forecasting, predictability, risk management, data stewardship or data governance and influencing. Let's dig that. Since the time, territory and technology is blurring everything, are you ready to do your forecasting and predictability of whatever you are doing in the organization? Then you are bringing in risk mitigation plan. In the risk management, I think most of us, we do risk management as a reporting. We don't do it by design. If you are doing it by design, then you are different. I love this word. Data is fact, but not the truth. So your data stewardship, data governance should be based on what it should be, the distinction between a fact and a truth. And impacting is, of course, transformation is very important when you try to influence or impact an organization, every decision, whether it is customer, internal, external, anybody. If we agree to that, I looked into a two-part. This is what we also do. One is that generally in a very conventional mechanism in an organization so far, we were doing a vision, core values, we used to do this, we used to do this, we used to do this, and then we used to review yearly. But these are very, very sequential. You can skip any place and start working. It's very, very sequential. It was not working well. We looked into this, that how we bring that value into a sustainability, the analysis which we have talked about in the previous 3 slides. We said that probably the first thing as a CFO or strategic CFO you need to do is to bring into proactiveness. And for that, you need to create well-orchestrated alternatives into a situation. If you can do that, probably you will be able to do it only when you do a very inclusive partnering with the businesses or the functions, right? And their needs structural changes. It need not necessarily that somebody needs to report to us to influence them. It's not required. Point number 3, we all know that the landscape is changing very fast. There is no option but to get into a best practices. So align to the best practices in the changing landscape. Cost optimization, believe me, without that there is nothing happens in this world. All mammoth goes out of the world only because they cannot manage their cost well. Point number 3, de-risking, I will not take much, and create a leadership. Your next line is very important in case you bring in a sustainability. And that becomes from a sequential way of doing a CFO work to a strategic or simultaneous way of doing the work. That brings in sustainability. I take you to this, to the next level. So if we are expected to do this, is it that the fundamental shift that was expected from a custodian to strategic partnering to the next level? Please read it carefully. Is the world, is the business is expecting you to be an economic guardian rather than also only a strategic partnering? Because you are proactive now, you are strategic, you are responsive, you are making things live. So are you expected to be an economic guardian? If you are expected to be an economic guardian, I put 3 factors in front of you. You can think it over, you can debate, you can scrap it, throw it off, doesn't matter. I'm only requesting you to think through it. Whether you accept does not really matter. You can challenge, throw it off later on. One is that, are you a chief value identifier, not cheap, chief value identifier in the organization? Are you doing it measuring and managing values and risk at the desired level? Are you doing it? Is your cash flow is in a proper place? Are you freeing up all blocked assets, all liquidity? Then you are adding value. Are you driving all the stakeholders into an innovation? If you are doing, then you are a chief economic value identifier. Are you a chief information architect? There is no doubt that the finance has 360-degree data compared to any other function in the organization. Probably CEO is the only other function, only other individual who has a 360-degree view. So if you have so much of data, why there are perceptions? Why can't we bring in factual data for our decision making? Why can't we be avoiding a perception to a value and risk driven decision making? Are we providing business tailored information? Are you provider of information or you are provider of an information matrix? That means person can pull information. Just I give you an example. Do you call up your banker to know how much money you have on your account? Answer is no. You can just log in and see. You might send a message and see what is this. This is called business tailored information. Millions and billions of customers in the world, they pull their information. But unfortunately in finance, we push the information. Now, that pushing of information is time-based. From there, the moment you move to a pull-based information, you are empowering that entire process, entire universe from the silo to a complete zone of value where the decision can take place. That's why the data stewardship also comes in. And the last one. I think finance, if you are doing it well in your organization, you are the chief ambassador. You are the only person in the organization who sells the organization. In marketing, if you have 10 divisions and 3,000 products, all 3,000 different divisions, products, business people, they sell only that. Like I have 15,000 SKUs. So I have 3,000 people to sell that. But you are the only person who sells the organization. And what do you sell? You sell to the capital market. You give the information to the financial world, to the business, to the board, to the management. You watch early. You are the whole and soul of ambassador of your company. And with that, I'm sorry, it is not very much visible. Can you see a little bit of color here? Okay. So if you are mostly on this side of your work, then you are actually bringing in growth and sustenance. But if you are mostly on this side of the work, then you are value enhancer. Market capitalization, getting right kind of money, right capital structure, right? You may get in. But if you are in the everything, you bring in an economic guardianship, which is nothing but a value-driven, mission-driven. Here comes the last chapter of my discussion today. We are within time, right? Yeah, thanks. And which is the lead the finance role. How we do it, how we bring an economic guardianship. Let's move into that. In my present organization, believe me, we have been following this for the last 5 years. There are ups and downs, but we got a good result. We defined the finance function into 3 parameters. One is trust and ability. I will talk about it. Number 2 is reliability. And number 3 is an insight and the sustainability. And when I talk about it, I talk about what is the trust and ability. Do you have an adequate mechanism of governance? Then you bring in trust. Do you have an adequate way of converging to compliance, raising funds, risk mitigation, managing risk, handle global investors? You bring in an ability and trust, which enhances value. On the reliability, we've spoken about, is your information is push or pull? Is it right timed or timed? Is it real time or right timed? If you are doing this, I don't think that you need to be worried about, because you are very, very reliable. Your data is done. Like I give you an example, we work in 21 countries, right? From Australia to US, my monthly closing is closed within 48 hours. And I'm saying 48 hours. Don't forget that in US is 10 years behind me and Australia is 6 hours ahead of me. But we can really close our accounts. I'm talking sincerely, close our accounts. And this is for the last 5 years we are doing. Internally, we call it as day 2 reporting is final. And when we talk about our internal information channel, my 3,000 marketing staff is connected in 8 minutes gap. My 3,000 marketing people, they know their target, they know their issues in 8 minutes gap. My entire profitability from SKU level to the brand level, to the division, to the region, to the company is live. So my CEO can actually look into his iPad and get it. He can even forward it to the respective managers to take a call. It is live. Live means we generally change because only for sake of doing it in every 8 hours. It's nothing else. Otherwise, it is live. Number 3, forecasting. It's very, very important. Are we doing a right kind of a sensitivity? These points I will not talk about because you do it as a part of a profession, as a part of the work. We are supposed to do it. If we do it, stability, reliability, insight, and foresight, I think we bring in a sustainable future. How to do it? That's the question. These are looks very nice when somebody stands in front of you and speak, and particularly just before lunch, right? While we are all attention is somewhere else. So this metamorphosis of coming out from a very role-driven to a strategy-driven CFO, what we need to do, that's my last section. This section is how to do it, how we manage. You can think through it because this particular section will be very, very debatable. Because I don't know about your organizational structure, the maturity level of the organization in terms of its digital platform, in terms of its IT infrastructure, and so on and so forth. Whether you are very big, whether you are small, whether you are 100 years old or a 5 years old startup, I'm not very sure. So I put it as a very generic way. The first is a CFO Technology Roadmap. I call it as technology enablers. These are the part which are low-hanging fruit. You can just automate them. And in all probability, in tomorrow's world, these will all be automated. You don't need anybody to work. 1990, when I started my career with then India's largest fertilizer company in Aditya Birla Group, I went to my plant for the first day. Those days it is 750 crores investment plant, ammonia urea complex. The entire plant, which was manufacturing approximately 3,000 tons of urea a day, covering close to about 600 acres of area, were being managed by about 15 people in a shift. And in this size of a room, there were control panels and people were managing. I left that job, and 6 years down the line, I joined the India's largest fertilizer plant called Chambal Fertilizers, and that was in early 2000 and late 90s. Believe me, by that time, the entire double size of that plant were being managed by exactly 3%, sitting lesser than this size of the room, 3 computers. And we today are talking about that the finance needs no automation in this. It can be automated. You don't need. Your statutory reporting, your MD&A can be written by NLGs. We are working on that. Your daily report, your analysis of your MIS can be written by NLGs, natural language generators, right? So it can be written. It can be written everything. So you can think through this process. Number 2, this particular part, I call it as an organization and enabler or CFO partnership, which is nothing but your FP&A, GST, supply chain, internal audit. Here you have to partner. This can be done, but here you have to partner well within this. Internal audit, I don't know whether it is part of your finance team or not. I kept it because in our case, it is part of my role. So that's why. Otherwise, in case it is different, then you have to think through the organizational structure. Point number 4, that skill set or roadmap, which is people enabler. Here you need good people, subject matter experts. I need not to talk about the treasury, the direct international taxes, risk management, which is very, very critical. And number 4, the governance roadmap. I call it as a cultural roadmap, where you talk about how I do a fundraising, capital structure, investors relations, and governance framework. If you do all these, then there is a nothing but and model which we are talking about for future, which is a strategic model of a CFO excellence. From a custodian value keeper, to a strategic partnering, to an economic guardian. That's what is, I think, probably we need to do to modern workforce that finance will be leading in days to come. People talked about data scientists. I agree that majority of work may go to the data scientist because majority of work will go into an automation level. So we have 360-degree review of the data. I completely agree with that. I could not resist myself. This is my last slide. Well, last slide. And somebody talked about Microsoft versus something else, I think TCS. And just a coincidence, I also quoted Bill Gates. This is a quote of Bill Gates. He talked about be mission-oriented, not just task-oriented. Mr. Kanan, I didn't know that you will talk about Bill Gates, Microsoft there. I sincerely admire this. We always overestimate the change that will occur in the next 2 years and underestimate the change that may occur in the next decade. As a finance professional, we sincerely need to think through this. Things are changing. Be mission-oriented, be only mission-oriented, value-oriented. Probably that's where our new role will be expected to do, and that's probably the CFO leadership. My job is done. If you have any queries, I can happy to answer, or it's the end of the session? Question. If you have any question, I will be happy. Otherwise, I will not stand between you and, I think, hopefully good lunch.
This point, I think, has been made throughout the previous presentations as well, that going forward, there would be a case where a finance team would have a majority of data scientists working for them, or data people, rather than just finance professionals, which is like the traditional finance professionals. So I just want to, just out of curiosity, want to check with your view, you being a seasoned professional for a few decades, that as finance professionals ourselves, and for all of us sitting in the room, what's the simplest and the best way to approach this to learn it ourselves, or get into this area ourselves, or just get people to do it for us, because data and data analysis is going to be the future, even for finance. So what's the most practical, most simple way to get there so that we are absolutely ready in the next year or year and a half or so?
Okay. Any question on the same process? Okay. I have my basic view. It can be different from people on the street. My view is that just to get into a conclusive area that we will be needing only data scientists, I think it is too early. Like the gentleman said, that most of us, we believe understand the AI well, but we may be doing it a little faster. My feel is more moderate. I do not feel in next 5 to 6 years term, I don't know about a decade, we will be needing major data scientists into the finance function. Because majorly the finance function is moving from a transaction management to a value addition mode, majority of the organizations. Yeah. So the moment you are in a value addition mode, that's the way we looked at, is that you will be needing people who understand how to play with the data. Then comes the data stewardship and data governance area. Very recently in one of the forum I spoke about it, that do we have a very sustainable data environment? If you have a sustainable data environment, you are, like in our case, out of the 21 countries barring Russia, all our places, I have a same system. Just for sake of to be non-commercial, I'm not naming them, but it is one of the ERP platform. So why did we do it? Because then the transaction and capture and the environment of data is same. But external data are at variant. So naturally you have to have a very significantly sustainable data environment. Once we do that, probably a data scientist role will come in. Even otherwise, today the academic processes does not give much data scientists. They produce lesser data scientists today. They produce more statisticians. Now, that also we need in terms of our overall architecture and environment in this country or otherwise, that how we bring in the data scientist into the place. That's my feel.
Sure, thank you.
Any other question? Thank you. So thank you very much for listening to this. Thank you.